Hello! In this video I'm going to be talking about multiple nodes, order flow trading strategy. You can use this strategy as a standalone strategy, which means that you can just use it with the order flow software. Nothing else is needed with that. You can enter with confirmations on delta or any other confirmations which I'm going to be showing you in next videos, but you can also trade this strategy without any sort of confirmation, which means that you can just enter your trades at the first touch. Just when you see this strategy or this trading setup form, you can just trade it without looking for any sort of confirmation. So let's go right into it. With this strategy, what you want to see is two or more high volume nodes, like in the picture. This is high volume node, so in every footprint, the place where the heaviest volumes got traded is highlighted like this. This is the high volume node, heaviest volumes throughout the whole footprint, throughout the whole candle. And what you want to see with this strategy is two or more of those high volume nodes next to each other, like in here. Now there are actually three conditions which all need to apply. So you need to see two or more of those high volume nodes appear at the same price level. So in this case, you can see that those two nodes are at the same price level. It is at 1.0921. They are at the same price level. So this is the first condition. The second condition is they are next to each other. So those two footprints are next to each other and those two nodes are next to each other. So that's the second condition. And the third one, this double node or this multiple node needs to be in a significant area. And this significant area either is before the trend starts or within a trend. That's this case, there is a downtrend and this double node got created within the downtrend, all right? So this is this case. Or another significant area is in a rejection. So if there was, for example, a rejection of higher prices like this, the price made a sharp rejection and there were two footprints at the top, for example, like this, then you would be looking for a double node in here or a multiple node somewhere within the rejection area. All right, so that's the significant area. You need to see the double node in such an area. If you don't see that in a significant area, then I don't consider it a valid trading setup. All right, so those three conditions all need to apply at the same time. This is important. All right, and you need to see two or more next to each other. Now the setting which I use for this strategy is the volume setting. So you can set it up in here in the cell content. You set it up for volumes. The chart will look like this with the nice gradient colors of gray. And those levels which you are going to find are strong support and resistance zones. So this level is a support and resistance zone. In this case, this is a resistance zone, all right? This is a resistance, and what you want to see is that the multiple node forms and then price moves away from it, like in here. The price moved downward, and best is to have a whole candle or more candles above or below it. In this case, the price is moving downward, so you want to have two or more whole candles, wick of the candle included, below this double node. So this is first candle, this is second one, this is a third one, three candles below it. And then you want to wait for a pullback, so you enter a trade when price makes it back to the multiple node. There is the pullback. This is the resistance. So this is where you enter your short. And as I already said, you can trade this with a confirmation or without a confirmation. It's up to you, what you prefer. Alright, so that's the description. Let me now go through some examples of how we can trade this strategy. So in here, this is Euro futures. It is a 5-minute chart. I like to trade this strategy with 5-minute charts or 30-minute charts. Well, you can also use, for example, 15-minute charts or 1-hour charts, but what I prefer is 5-minute or 30-minute chart. As you can see on the 5-minute chart, there was a downtrend, and within this downtrend, there was this double node here. So what you do next is you want to see one or more candle below this double node. So there is a plenty of them in here in this area, and you want to see a pullback to this level. This is the resistance. This is the pullback. This is where you enter your short. All right? The logic behind this setup is very similar to the setup which I showed you before, the volume cluster setup. Now, in area like this, in the heavy volume nodes, big volumes got traded, big volumes get accumulated, and this means that big guys are entering the market. Now, in this case, the big guys entered the market and then they pushed the price even lower. Then there was the pullback, and what you expect is those big guys to defend their selling positions and push the price downwards again. All right? The high volume node identify the big guys. They identify them because the big guys trade with the biggest volumes. All right? The most important price levels are always those who have the heaviest volumes. So that's the logic behind this setup. Let's move on into next example. In here, there's a multiple node at this price level, those 3 nodes. Then the price went below that, and this was actually like a start of a trend. Not that strong trend, but there was a visible selling activity in here, very aggressive selling activity. So you wait for pullback. This is the resistance. This is where you want to go short from, all right, from this triple node. Now let's move on into another example. This is a 5-minute chart, and in here we have 2 nodes next to each other, but also what you should notice is those 3 nodes in here. I know that there is not a node in here. If it was, then it would be 6 nodes next to each other, which would really be great, but still I also notice 3 nodes like that. Even if this node is lower, then this is a very significant area. All right, so many nodes at the same price level means that the big guys were really interested in this price level. By the way, you can also see that on the volume profile in here. This was the daily point of control, and from that the price went upwards. This was in an uptrend, all right? So this is the trend scenario. Multiple candles above this support. Then there was a pullback and a long from there. All right, so let's move on into the next chart. This one is a 30-minute chart. And this is a thing which I also like to notice. Multiple nodes in here and in here. We already had a scenario like this, very similar one. I know that there's sort of gap and the node in the middle candle is in here, but still we have 2 high volume nodes in here and then at the same price level in here. So this is sort of 4 high volume nodes almost next to each other, all right? This definitely is a significant area where sellers were adding to their selling positions to push it more downwards into the downtrend. What you do is you wait for a pullback. This is the resistance, this is your resistance level. you go short from there. Now in case like this, it sort of seems like this level got tested. This is the level. This was the first reaction to this area. So in this case, I would probably discard the level, alright, because of this reaction. It would be a winner in the end because of this reaction when the price actually hit the level and reacted to it. But this reaction right there came just 2 pips before the level, so it almost seems like the level was already tested. Alright, so let's move on into the next example. This one is a 5-minute chart. Now I'm using the 6E futures quite a lot for the examples. This is the Euro futures. I like to trade the Euro with the order flow, so most of the examples are going to be on the Euro futures. Now my point is that you don't really need to have too many markets when you are trading with the order flow, because there are quite a lot of setups which you can look for, and there's going to be action every day. There's going to be quite a lot of trades every day with the order flow, so you don't really need to have too many markets. For starters, I just suggest you use one market and you master it, and you actually don't need more. One market is all you need. So I focus mostly on the Euro futures. In here, the multiple node setup is right there at this price level. This was volume accumulation before start of the trend, so this is the first condition. Then there was the pullback and a nice reaction to the resistance which was in here. If you look at the delta, there's nice confirmation. As the price was rotating a little bit below the resistance, you can see that the sellers were already entering their shorts because the delta was negative. Alright, now there are also double nodes in here, but I don't really consider this an uptrend. This is just sort of shy upwards movement, but not really an uptrend. And also there were no 2 candles above it, 2 whole candles above it. I would like to see a gap right there. Those candles can't be as close as they are right now, alright? So this is not a valid long setup, alright? The only viable setup is this one, short, from here. Well, actually, I missed one thing. Those 2 nodes, but I don't know how the price continues from this place. So if there is a strong downtrend, if this is a start of strong downtrend, then this could be a resistance, because this double node would be formed at the beginning of the downtrend, but I don't know if the trend continued or no in here, so it's hard to say. Anyways, let's move forward into next example. 5-minute chart of the Euro futures. In here we have an uptrend, and within this uptrend there was this triple node. From that place, buying activity, 2 whole candles or 2 whole footprints above this support, which means the support got activated. When there is a pullback, you go long. And by the way, there's nice confirmation exactly on the level. As you can see, when the price made a pullback there, then this high volume node, this big number, means that somebody big entered the market, pretty likely with a limit order. As soon as this big order occurred at that price level, that would be the confirmation to go long from there. Alright, but I'm going to be talking about the confirmations later. Right now I just thought it would be worth pointing it out. In here we have a double node at the beginning of a downtrend. This is the downtrend, and the logic behind this is sellers accumulating their selling positions in here in this double node, then pushing the price downwards, adding to their shorts along the way to drive the price downwards, and then you wait for pullback, and this is the resistance zone. You want to go short from there. Now what I also see in here is also a double node. In this case, in sort of uptrend. This is not a strong uptrend, but the price is moving upwards. So a double node in area like this is worth noticing. This would be the support, and you'd go long from there. and this would make a 9 pip reaction. But maybe this is a nice opportunity for do a little chart commentary in here. What I also see on this chart is a rejection of higher prices. This sharp rejection of higher prices as a reaction to this double node. And it's not usually that good idea to go against such strong reversal, especially when it happens right after this support. Because this means aggressive sellers entering the market and they go against your support, which is not good. Also, this is the rejection of higher prices. And within the rejection, there is a high volume node in here, which is a resistance. As you can see, the price reacted to it, to the rejection and to the high volume node there, and went into a selling activity from there. So what I'm trying to say is that going long from this double node could be risky in this case. All right. And one more bonus to notice, one more warning to notice. Almost zero delta and price moves upwards, which is kind of weird. When the price is moving upwards, you want to see positive delta, like in here. Not delta close to zero. This means there are no buyers behind this movement. Another reason why to be careful with a long from this support. As you can see, it worked in the end, but the reaction wasn't that great. So that long would be risky. So that was a little chart analysis. And let's now go into another example. This is a 5-minute chart of the euro. What is worth noticing in here is this double node. And also actually those nodes in here, this double node in here. All those show you that this was a significant support area. By the way, you can also see that on the volume profile histogram. So anyways, what's most important is those two nodes before the start of this buying activity, start of the trend. This is the support. Now you are waiting for a pullback and you go long from there. All right. That's the support. There was also a triple node in here, which would mean if you traded it like blindly without any thinking where the trend is or what's happening, that would mean a short from there. But in this case, it seems a bit risky going short from there because you would go against sharp reversal, against aggressive buyers who rejected lower prices, who reacted to this setup in here and who are pushing the price upwards. Alright, so going short from there would be risky. And actually, this triple node doesn't really start a downtrend. So I wouldn't really advise you trading that. So the only valid level for me would be this one, this support. Now another example, this is a 5-minute chart of the euro. As you can see, there was a sharp reversal of higher prices, and within that reversal there was this double node in here. What happened next is the price made a pullback. This was the resistance marked by the double node, and this was the short trade entry. Right, short from there. There are also more double nodes on this screenshot, but they are not valid trade entries. This double node right there is not in an important area. It's not in a trend. It's not really before start of a trend, and it is not in a strong rejection of prices. So this isn't a double node I would be interested about. Then there's also this one. This would be actually cool, double node in an uptrend, but what I would like to see is at least one whole candle above it. Alright, so what happened was just double node formed, quick pullback and reaction, but I would prefer a whole candle above it. not as close as in this case. Alright, so that's for this example. Let's have a look at one more. There was a rejection of lower prices, and within that rejection there was the double node. So this was a support. There were some candles above it, which is great. Pullback and long from there. Now the last example. This is a 30-minute chart on the Euro futures. When you look at the overflow chart, you should immediately see this. This is very important zone. 3 nodes in here and 3 nodes in here. Then the price is moving above this area, tests back into those nodes. This is the support marked by the nodes, and you go long from there. Alright, so that's about it. That's about the multiple nodes setup. I really like to look for this setup, and when trading I'm always aware of where the high volumes nodes are, especially when they are stacked like this next to each other. I'm always aware of that, because those zones, no matter what trading instruments you trade, those zones are strong supports and resistances. Alright, so that's about this video. Thanks for watching, and I'll see you in the next one.